Hello and welcome to a sales tax compliance practice can be in your future webinar. I'm going to give people a few seconds to gather in, and then we'll get started shortly. I'm Joel from the Earmark team, and you can earn CPE for this webinar by using the Earmark mobile app. Download the app by scanning the QR code on your screen, or search for Earmark on the App Store or Google Play Store. Unlike traditional webinars, Earmark does not use polling questions during the presentation. Instead, you will verify your learning by taking a short quiz. Once the quiz is available, we will notify you via email. You can then use the app to earn your CPE certificate. So don't worry about polling questions or attendance checks today. Enjoy the webinar and look out for an email in a few days with a link to earn your CPE. Now, let's welcome our instructors, Clay Goodhue and Jamee Dunn.
Howdy, everyone. Welcome to Avalara's presentation on sales tax compliance practice can be in your future. So we're going to talk today about the complexities of sales tax and how you might utilize our services in your practice. My name is Jamee Dunn. I've been with Avalara since 2013. I absolutely love working with bookkeepers, accountants, and small business owners. I live on the beach here in Bainbridge Island, Washington, where Avalara started, and I've got 3 kids, and they're all boys, and 2 female dogs, because I got to have some girl energy here.
And my name is Clayton Goodhue. I am a director in Avalara's Emerging Small Business Group. Spent the last 11 years of my life helping companies understand, navigate, and automate this funny little world that we're going to learn about today called sales tax. When I'm not talking about tax, I'm relocated out to the great Northeast, where I spend my time exploring the wilds of Maine with my wife and 2 kids. Let's talk a bit about the agenda for the day so we make sure everybody's in the right place. As we think about sales tax compliance in its ability to be a future in your practice, here's how we're going to land that plane. We're going to talk a bit about why sales tax matters. We're going to go over an overview. What are the basics? When to collect? Do you have Nexus? Got Nexus? We're going to talk about 5 steps to managing sales tax compliance. And then we're going to talk a little bit about how Avalara, how technology allows either you on behalf of your clients or you with a referral to your clients help streamline sales tax management. As is common when we talk with companies, with someone that may be your client, it's important to start with, why does this even matter? Why does sales tax matter? Why does it exist? Why, over the course of the last 15 years, has it just become increasingly important and increasingly complex for companies to navigate? At its highest level, this is why it matters. It is number 2 as a contribution to revenue for the states. This is the second most thing that states look to when they are trying to source and create revenue, just after property tax, above income tax, and above all other sort of bundling tax, if you think about corporate income, motor vehicle, etc. So it's governed at the state level, and in some instances, it's governed at the local level. It is a pass-through tax. It is a tax that is imposed on an end user, collected by the entity facilitating the sale, and then passed through to the government. So if we start from 1,000,000 feet as to why do states spend time looking at this, enacting legislation, changing legislation, and imposing that legislation, it is because it often makes up around 24% of the revenue that the states use to run their state.
And Clay, something to just jump in there on a really raw level. If your clients aren't filing remitting for sales tax in these states, that means they're stealing from the government, just at a really raw level. I mean, it's very serious stuff.
It is, and the states, and we'll talk about a bit as to the lengths of their ability to impose this obligation onto a client. But at its rawest level, the failure to do so in the state of an eyes is a contribution to a budget deficit, is money that they should be able to spend to run their state or their local city. Now, this is going to be a constant theme in today's presentation. You're going to see a map layered over the United States. You're going to see various colors on that map. And in every sense, you're going to reality, which is there's often no commonality, or states don't agree on anything when it comes to sales tax. So in our first example, this is a picture of how reliant different states are about sales tax. And you probably see some relative loose association between the imposition of a state level income tax and the sales tax rate. So I recently moved from Washington. Washington does, has I would say nicer laws in my respect than the state of Maine does with respect to income tax. But the flip side, as there always is in the world of tax, is it's got often 30 to 40% of its revenue coming from sales tax. So the only call out here, and it's an interesting one, because while some states it's upwards of 40 plus, and some states it's between 10 and 20, there is only one state that it is lower than 10%, and that is Alaska. Now, Alaska is an interesting case for a number of reasons. Effectively, it doesn't have a state level sales tax. Every other state that you see here that has sales tax, it at least contributes to about 10% of their tax revenue. So let's talk about some of the basics now that we understand, just from a million feet, why states focus on this. And I'm going to turn it over to my co-host for the first of our, can you guess one of these ridiculous rules that exists in the world of tax today?
All right. Thanks, Clay. So Oregon is a nomad state. There's 7 states that don't have sales tax. Oregon is one of them. But one thing is taxable. And if you're familiar with Oregon, and I am because I'm in the state above that, which is Washington State, Oregon, we love to say, is weird. You may have seen that TV show Portlandia. There's a big marketing campaign keeping Portland weird. It's a neat place. It's a great place to visit. So which of these items do you think would actually be taxable? If nothing else in the state of Oregon is taxable, which would it be? And if you have any comments, put them in the chat.
In 3, 2, 1.
It is the bicycle, which is completely opposite of what we would think based on the fact that people love to have bicycle transportation in the city of Portland. And the reason it is because it's a $15 tax that goes to pedestrian transportation projects. So that's actually pretty cool, but also very weird because, well, Oregon's weird.
Let's dive into one more.
Okay. Wow. Okay. This is we're just trying to keep you guys awake here. New York taxes some powdered beverage mixes, but one is exempt. Now, ways to think about this would be, is there a food product in here? Is there a chemical? Is it made a certain way? What would make one of these items tax exempt? I personally would think which one has the most like actual real food or some sort of strange chemical. The answer, however, is Tang. And the answer is, the reason is because nobody knows. That's the actual reason. Nobody actually knows why Tang is non-taxable. Is it non-taxable? Yeah. And but the funny part is people love to say it's because Tang went to the moon, so it deserves some special treatment. But there's literally no reason whatsoever why this is unique. Thank you.
And here's the interesting part. Oftentimes when we talk about tax and we talk about these unique scenarios, unique circumstances, times in which you're probably saying, well, wait a minute, how could there possibly not be a reason? Well, if you read a particular state statute, it's just on a list, and it's not on the other side of the list, which defines taxable versus not taxable. We have to choose between hundreds of slides that exemplify that exact sort of craziness that governs the world of sales tax. So as we kind of take it into more real life examples, because I have a hard time believing that there's a bunch of firms sitting in the room today and they're thinking, wow, yes, all my clients sell Tang, so this is really relevant to me. This extends into very common industries where I'm sure you have clients that are serving. So we get in the world of, you know, tangible things, but then we look at services, which have similar rules that govern whether or not they're taxable. You know, tangible goods, we think clothing, and we think, okay, some states have thresholds as to the price on clothing that will drive whether or not it's taxable. You know, software, often you look at tax legislation and just sort of like economic trends and the rise of software over the last 20 years, and the continued imposition of states that will now tax software as it becomes a higher contributor to the total revenue in the state, as it's, you know, a widely adopted thing at this point. So the point here is, as you kind of get into like, okay, I understand why it matters. Now I kind of need to define what it is. How does it matter to me? How does it matter to my clients? One of these initial challenges to even figure out where to start is, what am I selling? And that gets us into this next sort of concept, which is, as I start to say, how do I help myself? How do I help my clients define the problem before we can prescribe any type of solution? We really commonly think about three things in the world of sales tax. It's all about the where, the who, and the what. Where am I selling this product? Where am I delivering the service? And therefore, what are the rules that apply to that state or that local? Who am I selling it to? The who I'm selling it to can drive a bunch of different things with respect to whether or not I need to actually apply tax, or I need to do something else that we'll touch on a bit later here. And we just kind of got to the what. Am I selling a t-shirt? Am I selling a cup? Am I selling software? Is that software SaaS? Is it electronically downloaded? Don't even get me started on the services front. So as we start to piece together, all right, as I am to incorporate sales tax as a part of my future practice, in either I'm using tools to help serve my clients, or I'm just trying to help my clients navigate this complex problem as their trusted advisor, we start with the where, the who, and the what. I told you, commonality, you're going to see this version of the map quite a bit. And now as we look to previously a concept of how much revenue does a state get as a contribution from sales tax, you can kind of see a similar trend here, which is, okay, how high are the actual sales taxes in your state? And you'll see a relatively common pattern. If you remember on the map previously, the South, my state of Washington, and the Northwest both had significantly high percent contribution at, you know, as a percent of sales tax. Relatively same here. They have really high sales tax rates. One thing I want to point out, because it's something that we'll touch on, is on the high end, you see dark red is 9+. On the low end, you see is a lighter shade of yellow. That is under 6%. I think we throw around a number of, at any one point in time, there's around 12,000 different combinations of rates, rules, and boundaries, which will dictate, even within these states, where that sales tax rate falls. But this just gives you another picture of, if you click out and look at the sales tax governance as a whole, it's crazy complex and nobody agrees. And just to double click one last time on why this matters, this is a statutory requirement. It is not an option. To Jamie's point, we're going to get into this lovely term called nexus here in a minute, which is where we start our story. Once you have nexus, once you have the requirement, it is up to you to be the one that fulfills these duties. It's always changing. The first two, I think, slides can kind of underscore how much complexity lie in the world of tax as it is today. And I'm here to tell you, inevitably, if we look at 6 months in the future, rates will change, rules will change, boundaries will change. And the tough part for companies, for your clients, and even for maybe yourself is it's 100% non-revenue generating activity. It is a statutory requirement. It is complex, and it's not going to make you any money. And as we get from why does it matter to kind of this high level fundamentals of, all right, it matters different to different industries. And one place where I really want to start is trying to define for my clients, is what you sell taxable? Now you get to this next concept, and it's a central concept at the start of the sales tax story. And it's this concept called tax nexus. Do you got nexus? And I'll give you a funny story here, and it happened literally within this last week. I was talking to someone in my personal life, and they were doing something for their work, and they just said, "Hey, Clay, do you know what the word nexus means?" And I about jumped out of my chair, because nexus is a word that means something not just through the lens of sales tax. Nexus just means the link or connection between two things. And I said, boy, oh boy, do I absolutely know what the word nexus means, because it is the word that's used in sales tax. So when we think about sales tax nexus, it is basically as the way, throughout the way that you've conducted business, how you sell, who you sell to, how much have you sold, have you created enough of a requirement where now you are the responsible entity for being tax compliant. And as we unpack, as you work with one of your clients through, okay, what does tax mean to you? And we think about this first concept of nexus, it can't just be one thing, right? No. It has to be complicated. It has to be multiple. And it is. We start left to right. We have this concept of physical nexus. Where am I? Where are my people? Where is my property? Where are my offices? As we get further to the right, we get a little bit more nuanced, a little bit more, well, it's not just about physically where you are, it's about how you run your business. Economic nexus. We're going to double click on that here in a minute. We're going to dive into what it means. It's the newer nexus to the party. It is now about 5 years old. It is incredibly important. Click-through nexus. How have I structured my referral relationships with entities that are not mine, but exist in a different state? And how much money am I doing with them? Affiliate nexus. We talk a bit about corporate structure. Do I have like entities? Do I have like brands? Is there similar stakeholders in these different companies? And can a state impose, because of my relationship from a corporate structure, does one entity have the same requirement as another? Marketplace nexus, we're not going to touch on in too much depth in this presentation. Effectively, what that means is a set of rules that govern if you yourself are the marketplace, meaning you have a technology and infrastructure which facilitates the engagement of a buyer and a seller. So it's not, am I selling on Amazon? It is, do I run a platform like Amazon? Here's my suggestion. If you have a client that runs a marketplace and they are unsure, just pick up the phone and give us a shout, because there's a whole host of unique, nuanced, and incredibly, impactful laws that impact marketplaces themselves. As we think about double clicking on physical first, the easy things are, do I have salespeople? Do I have offices? Do I maintain and own inventory? And are those things physically in different states? But the list gets a little obscure too, right? We talk to a lot of companies that have some sort of like maintenance or service or repair where they're going out or sending an entity out on their behalf. In a lot of states that can qualify as physical nexus. So this list that companies need to look at as they conduct business today or as they look to strategies in the future is pretty exhaustive. So I've checked off physical, and I've said, okay, I know these are the states that I'm physically present in. 10 years ago, that was it. That was the gig. Like, that was the list that I've created. And I don't care if I did 100,000, 100 million, or $100 billion, whether or not I needed to comply was driven by my physical footprint. No longer. As of June 21st, 2018, a court case that came by way of South Dakota versus Wayfair imposed what is now called economic nexus. And you can see, given that we're about 5 years in, all 45 states have adopted this concept. The concept at its highest level is, now I look to follow the money as well as the physical footprint. And I want to be clear, this is not it's not I have a physical presence and now I do this amount of money. It's an or. We're looking at both of these as a potential contribution to whether or not you need to be the responsible party for being compliant. Here's my map again. You're going to get sick of it before the end, because it just is, again, it exemplifies the fact that none of these states, for the most part, agree. Now, there's commonalities when we think about thresholds. The effective small business exception that was set forth by the Supreme Court is that 100,000 or 200 transactions, represented by states in the light blue. In a state in one of the light blue, and there's differences in the time frame. Is it calendar year? Is it rolling 12 months? But effectively now companies need to navigate, have I exceeded one of these thresholds? And if I do, once I do, from that point moving forward, I need to register and do the requisite things to be compliant on an ongoing basis.
Hey, Clay, I got a question.
Please.
With 200 transactions, could they be like 1 cent transactions and still qualify?
They can be 1 cent transactions and still qualify.
So this is like absurd. Every state acts like its own country, essentially.
And don't even get me started on some of the places that enable their local government to create these rules as well. But we haven't seen that a lot on the economic side. But look, it puts companies in tricky spots, not only because it's incredibly hard to understand, like, where do I even need to be? It's dollars, it's transactions, it's it's 12 months, it's a calendar year. But it's incredibly important because this is the first step for either yourself or your clients to say, where do I even need to be compliant? Like, where do I even need to understand? Do I need to understand Arizona's rule, Texas's rule, Washington's rule? This is where it all starts. And I know what you're saying. That's complex. There cannot be another layer that you haven't mentioned. Of course, there's another layer I haven't mentioned. And this is one that actually comes up really commonly. And that is, well, hey, I have this business and I have some retail. I have but I'm traditionally a wholesaler. This probably doesn't matter to me because most of my dollars are non-taxable. And that would be true in some places. So this is a map that says, when I look at those thresholds, what types of dollars count? Do my exempt sales, are they included? Are my exempt sales excluded? How do I treat sales that I make on a marketplace? So I sell on Amazon. Does that count for me? Once again, nobody agrees. And it's another layer for specific companies in specific industries to say, oh boy, now I need to bifurcate revenue by source and layer that over an already complex, multiple different thresholds depending on the state. And
Okay.
you only need to wait 24 minutes and 13 seconds to get back to an episode of Can You Guess with Jamee Dunn.
Can you guess with Jamee Dunn? Heads up, everybody. Heads up, 7-Up. Can you guess what mode of transportation is tax-free in Kansas? Now, I'm pretty sure Kansas doesn't have an ocean, but the other 3 might apply. Kansas.
In 3, 2, and 1.
It is the hot air balloon. And I'm going to read you something slightly arduous, but I want you all to pay attention because it's really interesting and it fully describes why this is so messed up. Okay. The Anti-Head Tax Act treats untethered, which means untied, balloon rides where the balloon has piloted some distance downwind from the launching point as carrying passengers in air commerce. Okay, that is like a run-on sentence, but it's on the Google. As such, Kansas cannot tax untethered balloon rides. In contrast, Texas can and does tax hot air balloons tethered to the ground. Okay, This is telling you how screwed up this is. This is crazy. I mean, the things that these states have done to small business owners and accounting people like yourselves, to me, is a shame. It's crazy. So that's why it's so hard. And I will say one more thing. When Clay and I first started at Avalara, our phones rang because people were being audited. And it's really wonderful to see all of you accounting folks evolve and realize that you got to get ahead of this. You've got to get ahead of this. Like the things that Clay has shown you today on the multiple maps, there's not a way that one human can have all that knowledge or spend their time going to every single website trying to figure this out for your clients. And if you are, no offense to you, you're probably maybe making a little error. So I'm a huge believer that sales tax compliance needs to be a big part of your tech stack.
And we're going to transition in a bit about once we've defined Nexus, okay, what comes next? Because it's the tip of the spear and it is inherently complex. And a lot of the times when we're talking to firms or we're talking with firms and their clients, it's where we spend a lot of time in the small business space. Because for the most part, companies don't have a great grasp on the rules. And it's like, once we define where you are, your Nexus footprint, then it really helps us define exactly what you might need to do. But I just want to make one point to what Jamie said. And it's a point that I made earlier, where it's like, there's a possibility that I've just picked out the most sort of ridiculously worded tax parable or tax. It's just not true. Like you can look at threshold laws for clothing or the way that, Texas describes when they don't tax software. And it's just so hard to even do the research, even if you wanted to. So now as we really get into, all right, we understood Nexus. That's where it starts. What states am I in today? Why am I in them? What do I do now? Well, the next concept is well, I gotta calculate. I need to calculate. Well, there's a step in between that, and that step is registration. Then it's calculation. Then it's some elements of tracking, which we'll touch on. And at the end of the day, your prize for doing all this correctly is you need to find a way to make sure that you pay the states their money. And we'll dive into kind of each one of them just to give you an overview and some sort of recommendations. Now we talked on this one, and Nexus is where it all starts. And the challenge is not only where does it start today, where am I in today, but then how do I track and maintain that in an easy way moving forward? Because a lot of the times we'll spend multiple calls with companies just specifically around defining a state of affairs today for their business as it relates to Nexus. And then inevitably two things happen. Yeah, we'll call it three. One, your business grows. And so as you continue to make sales, you have to track that economic nexus and make sure you understand where you're selling and how does it impact where you need to be. Number two, the rules change. A threshold goes up, a threshold goes down. A company adds transactions, or a state. We've had some states that have actually dropped their language around transactions, which is great for small sellers. But how do you now govern the change in laws that also, accommodate for your growth and your contribution? And then you have the possibility that you just have a fundamental change to your business strategy. It's like, oh, what if we do a cool new strategy with inventory? What if we think about something like fulfillment by Amazon, which in a vacuum, you'd think, well, how does that relate to tax? Well, if you're going to distribute your inventory through their warehouse, it has everything to do with tax. Now, that's not necessarily growth by numbers. That's not necessarily the tax rule changed. That's this cool thing that you're thinking about your business. How do you make sure you accommodate for that as it relates to this important thing called tax? And this kind of goes into some additional things that you need to register that I won't get into, but we do have a free economic nexus solution if that's something that yourself or yourself on behalf of your clients might be interested in. And here's one thing that we actually talk about a lot as well. For companies that have seen significant growth that should have been registered previously, that may have hit an economic nexus threshold 3 years ago, there is also often a conversation that we have with, okay, well, what's the best path forward given there's a possibility or a certainty that your company should have been doing this in the past. And this is when we get into the conversation that Jamie said is we would much prefer that we're having this conversation based on an educational event through a webinar, for instance, rather than having a conversation because someone's been contacted by a state. There are a number of different alternatives to register, which include addressing historical compliance. A company would do that for a litany of reasons, but just know that as a company is thinking about, okay, I have a problem, I want to go solve it, there are some different ways to think through what is solving it. And your price for registration is the requirement to accurately calculate. And hey, here we go, it's updated. We're up to 13,000 taxing jurisdictions in the United States. And 1,800 different rules. We mentioned this ridiculous example of Tang, of a hot air balloon, and I ground you in the reality that that conversation is relevant to services, software, clothing, supplements. And then we have every ridiculous example of, okay, well, that's what Kansas thinks about a hot air balloon. What about the other 50 states? And now it's this blend of how do I get the rate right? State, county, city, special taxing jurisdiction, blended with the fact that I really need to understand all the different rules with relation to what I sell. Donuts is a good example because the way that food is governed is amongst the most ridiculous. And here's some good examples of maybe more like, again, how many of you have clients that are selling hot air balloon rides? I do not know. Toothbrushes and dental floss, exempt in Pennsylvania, taxable in New York. Tang Kool-Aid. We have a bunch of slides about candy and Reese's taxable, Kit Kat not. Ridiculous. They're candies. They are both. You can't argue that they're not both candies, but sometimes the contribution of flour is what dictates. So you have this challenge, and really, much like the rest of these themes are, it's a challenge as it exists in today, researching for today, updating your core business systems for today, and understanding that inevitably next month they will change. So we touched on this at a couple of points, and it often comes up when we think about the concept of economic nexus, and I say, which of my dollars count? So there's a certain part of likely your client base, depending on the types of clients that you serve, that really need to focus on the who of our conversation here. Who am I selling it to? And can that person, can that entity claim that, hey, you shouldn't charge me tax? And there's a bunch of different examples when I have a specific purchase. There's a lot of examples if I'm selling into government agencies, nonprofit organizations, a bunch of times in which maybe the thing that I'm selling is going to be used in manufacturing. Certainly the thing that I'm going to be selling is going to be resold. And now I'm thinking about, if someone comes in and says, hey, why didn't you charge tax on this invoice? What can I show to prove that I didn't need to? And that really is this sort of ongoing determination of, do I have certificates on file? Are they valid? Are they correct? Do they cover the different states in which I'm enabling my customers to make purchases in? And then what's my process, again, on an ongoing basis to make sure that this is all still good and well? In the grand finale, the grand prize, and I'll talk a bit about all of the kind of the noise or circumstance around this, but at its core, the fifth step is I've registered, I figured out, oh my goodness, I collect here, I don't collect here, I collect when I sell to this company and not to that company, when I sell this thing but not the other. I've collected all this money. Well, now the state wants the money, right? You got to remit, you got to file, you got to pay, and then you got to keep sort of a receipt, so to speak, that you did it all right. And And this inevitably can change as well if it's the forms, if it's the frequencies, if it's your adding states. So this is, again, not only a problem for a moment in time to both do and understand. This is something that a company thinks about every month. And we have talked for 35 minutes and 41 seconds about this problem. It is complex. It is complex for possibly you. It is almost certainly complex for your clients. As we have covered, it is not an option. And it is not making anybody any money out there. And it's really why Avalara exists. It's why we sit and spend time with our friends over at Earmark. It's what Jamie and I and our teams do every day. Is we spend a majority of the time trying to help companies like yourself, like your clients, figure out what the heck does this even mean for me. And then we have a bunch of solutions, of technologies, of tools that make sure that you don't have to go it alone. And so as we hark back to our where, register, calculate, track, remit story, Avalara has pairing solutions that make sure that if sales tax is going to be a part of your practice in the future, it does not necessarily mean that you have to become a sales tax expert. That is what we're here to help you do through a series of tooling that really acts to simplify the question of, can you interpret Kansas's hot air balloon statute to, hey, what is it that you sell? Okay, great. That's all we need. We do nexus assessments. We help with licensing. We have a flagship solution that helps with the calculation, certificate management, and a returns platform as well. And if I'm going to make a pitch, and I love this job. I've worked here for 11 years, and I work in the sales department because for the most part, we don't need to make a pitch. Like, we are helping educate. And through education, we determine whether or not you or your client has a problem. And most of the times, if we have a problem in this industry, the solution isn't, well, let's throw some bodies at it. But I'm talking accuracy. We've touched on the complexity of the lunacy that is tax. I'm talking about efficiency. We have a wonderful resource internally who has spent her probably last 13 years at Avalara. She came from a life of tax. Her line is sales tax is an accidental profession, almost exclusively. Like, for the most part, there aren't college degrees that are centered around indirect tax compliance. So we look at efficiency, making sure that we are not trying to become experts. We are deploying solutions. Customer satisfaction. So this is a big one. Economic nexus, most people are getting charged tax. On a consumer side, certainly on a business side. So I know whether or not I should be charged tax. I know what rate I should be charged. If we don't get it right, I have worked with a number of companies that say, I spend a lot of this resource, and he or she just talks to unhappy customers, and I'm doing tax-only credits back. Risk management should go sort of unsaid. If we don't do it, it's a statutory requirement. I accrue risk for my company. And business growth, like, this is something that frees your time, your client's time, to go try to spend time on the things that matter. And we have tons of companies that have gone through the steps of automation. We have tons of firms that we work with that have developed tooling that helps their clients do this. And you see these mapped to the rest of our categories, which is, I'm actually confident this is getting done right. I don't spend resources. I have peace of mind. I have coupled this with the different ways that I do billing. I've reduced cost. I feel like I can scale, and some elements around my exemption process is better. And I'll talk quickly about the compliance suite that we have specifically for accountants, and it does map over this sort of identify, register, collect, calculate. We got track missing somewhere in there, but it's the same story, right? It's end to end from the beginning of the story until the states get paid and we document. There's a suite of tools and solutions that also firms leverage. That's research, that's licensing, certificate management, some of the same concepts, but tools specifically meant for accountants to support their clients' end-to-end journey. And we have a bunch of different ways that we work with the accounting channel, and I'll let Jamie chime in here because I think this is our
Sure. Yeah. So you guys, if I had one thing that I would say after working with bookkeepers and accountants and CPAs for the last decade is that there's no smoke and mirrors to what we do. You either need what we have or you don't. We've got about 36 different products like Clay showed, and it's all a la carte. What's going to work best for your client and for you and your business. So there's 3 ways that you can work with us. It's the traditional way, which is a referral motion, where you call your partner manager, somebody like me, and you say, "Hey, Jamie, I've got this client. They're using Shopify Plus and QuickBooks Enterprise, and gosh, they're also selling into Europe, and I need some help with this. Oh, by the way, they're also in a marketplace." I mean, it's mind-boggling, right? And Clay's got about 50 experts that work for him that sit down and have a 30-minute totally complimentary conversation with you or your client, whatever you like, to go through the variety of the scenarios that Clay showed throughout these slides. It's extraordinarily complicated, and our folks are trained to ask the questions to understand what it is your client ultimately needs, and then you decide with your client what pieces you decide you want to keep and what pieces you want Avalara to handle for you. The other part of what we offer is an Avalara for Accountants program where we offer tools for your firm. And what that means is instead of referring business, or maybe you refer some business, you also purchase some products from Avalara that help you manage sales tax inside your business. Those tools are something like Avalara Tax Research, which is an incredible library of every single tax code, a manage returns portal, like a portal, an actual dashboard where you file all of your clients' returns from one spot, and 1099s and many, many other things to help you with sales tax inside your business. So there's the referral motion where you say, "Jamie, I need help with XYZ client. What's going to be a good fit for them?" And you pass them over to Avalara. And then there's this hybrid motion where you purchase tools for inside your firm to help you be more successful with sales tax compliance in your firm. And then the third thing that we're offering, which is about 18 months old at this point, is an implementation program. It's called Certified Implementation Partner. And essentially, we feel like if you are trained to take your customer live on Avalara's products, you'll be able to earn revenue on that. And also it makes your customers more sticky for you. So there's a referral motion, there's the internal tools pieces, and then there's the CIP, the Certified Implementation Partner Program, that you are welcome to join. All of this is through our partner program, and you'll see, I think, on the next slide where there is a link on how you can find out more information. You know, you can see that Clay and I are super passionate about this. We're passionate about it because we've watched it evolve, and we've watched you all go from being in the nitty gritty, in the deep darkness of trying to figure all this out and doing their bookkeeping, to all these apps. There's hundreds and hundreds of apps now that you have to learn and use. And as I said earlier, I believe that other than having, you know, your accounting ledger and a payroll app, that sales tax compliance needs to be in your top 5 pieces of your tech stacks for your clients. And I also very strongly believe, and I have a lot of bookkeeping and accounting partners that say, you know what, when your clients tell you they don't want to deal with sales tax and they don't want to look at it, they want to stick their head in the sand, that's not good for you. When you use Avalara, it passes a liability on over to us. And as Clay said multiple times, and he's not wrong, spending all of your time on these state websites looking for little details and changes, because there's thousands and thousands of changes every year, is not a money-making activity for you at all. So with that, Clay, do you have anything to wrap it up that you'd like to say?
I do, because I was so focused on you, the audience, and all you wonderful people, that I realized that I drastically underestimated how much natural light I was left in Maine this afternoon, and I faded into the dark.
I see that. You are in the dark suddenly.
As a newer resident of the Northeast, that is something I will take under advisement moving forward. But no, look, I hope everyone learned something today. This is something that we love talking to firms about, helping continue to educate. Oftentimes we get, well, hey, I have this weird scenario. almost every scenario is a weird scenario. So if
True.
you're thinking about yourself or a client and you have a question, please don't hesitate to reach out. I just want to thank our friends over at Earmark for putting this on.
Thank you.
And I'll kick it back to Joel.
Thank you so much, Clay and Jamie. That was fantastic. And thank you to all of our attendees. If you're interested in earning CPE, keep an eye out for an email in the next few days. It will contain instructions on how to take a short quiz through the Earmark app. If you have any questions or concerns, please email support@earmarkcpe.com and have a great day.